Welcome to XYPN Radio, where your host Alan Moore brings you into a community of fee-only financial planners who want to profitably and successfully serve Gen X and Gen Y clients. If you're ready to get the knowledge you need from leaders in your field, learn from forward-thinking advisors, and take action on your own goals, XYPN Radio is the show for you. Here's your host.
Hello and welcome to this episode of XYPN Radio. I'm your host, Alan Moore, and I'm excited to have XYPN member Dave Zaegel on the show today. Dave is a partner in two businesses, CPAs for Hire, an accounting firm, and CWOs for Hire, a financial planning firm based out of St. Louis. Dave left public accounting to become a financial planner with MassMutual, and the office that he worked in had a really strong planning-centric culture. Unfortunately, he was limited in how much tax work he could do and ultimately left to launch his own RIA so he could provide what he considers comprehensive financial planning services because it includes a lot of the tax work to his clients. Dave and his partner Dennis focus on working with small business owners, and we talked in detail about how his financial planning process works, their fee structure, and the sales conversation that he has with his ideal prospective clients. We also dug into the overall structure of the two businesses, how they work together, and his hiring plans given the growth of both. This is a great episode for all financial planners, but especially those wanting to incorporate more in-depth tax planning and even tax preparation into their financial planning service model. XYPN Radio listeners, you're invited to attend the event of the year, and even better, you're invited to get your pass at the best possible price. The can't-miss annual XYPN Live Conference returns to St. Louis in September 2019 with valuable content for new firm launchers and established firm owners alike. Take a couple of days to work on your business instead of in your business, and connect with like-minded financial advisors leading the real financial planning movement. Go to xyplanningnetwork.com/XYPN Live Radio to get a deal on your pass through the end of the month. But hurry, the price goes up at the first of the year. Visit xyplanningnetwork.com/XYPN Live Radio to grab your pass today. You can find any of the additional resources that we mentioned during the episode at xyplanningnetwork.com/183. Also, be sure to go to xyplanningnetwork.com/VIP to join our private group just for XYPN Radio listeners. It's the community of advisors we've all been looking for that's there to provide support when we need it the most. Best of all, it's free. I encourage you to check it out. Again, that's xyplanningnetwork.com/VIP. Without further ado, here's my interview with Dave. Hey, Dave, welcome to the show, man. Thanks so much for being on.
Oh, you're welcome. Thanks for having me on.
So give listeners just a quick overview of you and your business. Where are you located, number of clients, the uniqueness of your firm structure, and then we'll dig into the details.
Sure. We're located in St. Louis, so out in the suburbs of St. Louis County. My partner and I, we have a financial planning practice and an accounting firm. We are both accountants by background. I just decided to make the transition years ago into financial planning. And we have a particular emphasis on business owners just because of that, because we can help with both taxes and the accounting and the financial planning and investment management and really combine it all together. So far, we've got, I think, 46 clients as of today. Now, granted, some of those are smaller and some of those are carried over from when I was at MassMutual and whatnot, but so not everybody are the true, what I would call just the ideal target market. But some people are just, folks that I know, and they have maybe small investment balances on AUM or something, and that's all good. But yeah, about 46 in total right now. Okay.
So what percentage of your clients fit into that sort of business owner, profile? Is it the majority or just a few?
No, I'd say it's about half. It's kind of a mix. I mean, really, I wasn't, I guess we'll kind of get into the history. Back when I was at MassMutual, I didn't really have a target market. You just kind of go talk to people. So really, it was once we combined the tax planning in with that, that we were able to target the business owners over the past couple of years. So it's still about a mix of half and half.
Okay. Yeah. And we've never really defined what percentage of your clients must be in a niche before you can claim to be a niche focused firm. I think 50% is normal in terms of what we see, especially early on, just because people tend to have clients that, come from outside the niche and just other situations. Very rarely, there's only a handful I'm aware of that are 100%. We only work with this particular client base. 50% plus is usually the line of okay, you definitely have a niche. There's no question. Cool. So taking a step back and just talking a little bit about career path and sort of what led you to launching a financial planning firm. So you said you have an accountant background. So did you get a degree in accounting?
Yep. Yeah, I got the accounting degree and kind of did the traditional route of, get the master's in accounting and then get your CPA license. Then I worked in public accounting. I was at Ernst & Young for 3 years and then was in corporate accounting, kind of worked my way up to an accounting director level. So I was in the corporate world for about 8 years. Did a lot there. That was really just very fast-paced company, constantly changing, really stressful, really long hours. But it was really helpful to learn all of that and get that background. So after about 8 years,
were you doing a lot of tax work, or were you on the audit side?
So I was a little of both. So when in the corporate world, I started as an internal auditor for 2 years. I was actually at a company called Merritt's, which most people have never heard that name. It's a pretty large employer in St. Louis, but it's one of those companies that's kind of in the background of other large corporations.
Yeah.
So I was there and I got lucky because I liked that company a lot. They weren't quite growing as much as they had in the past. And I found out why shortly thereafter, because I left there in 2007, right before the economy tanked. And like I said, they help a lot of large corporations. So those corporations were slowing and the company was slowing. But I got lucky and left there and went into healthcare. So yay, recession proof.
Yeah. Talk about a big transition. What led you away from accounting then?
Really just wanted to get into financial planning. We kind of bounced the idea around for a while, my wife and I. I was one of these people who would just love reading books on planning and, estate planning and tax planning. And, most people read fun fiction books. I just like the nerdy, technical, get into the details type of stuff. So I just loved looking at investments and, like I said, reading all sorts of different planning materials. So we just decided to make the jump eventually. And it was more a matter of just getting over the fear of it more than anything. I think that's when we decided it was okay to start going into financial planning was when, and I think you've mentioned this a number of times on these podcasts, is, well, what's the worst thing that's going to happen? You go back working a job like you used to. So,
right. Public accounting will always be there for you if you ever want to go back.
Yeah, that's a great thing about accounting. If I changed my LinkedIn profile today and said I was looking for a job, I'd be hounded. So it's a good thing to have that background. And that's when like I said, we got over the fear of, oh my gosh, what could possibly happen? And realized that worst case scenario is you go get a job. Like that's not so bad.
So you made the leap into healthcare. So what was your role there?
Just still in accounting. It was just with a healthcare company. It was a company that's kind of a combination of Medicare insurance. And then they also had consulting and technology as well. So, and it's actually it's been 6 years since I've been there. We grew a lot when I was there and they've grown even more since then. So it's a fairly major company with some significant investors. So good place to work. Like I said, it was just super stressful and, long hours, and that kind of wears on you after, a half a dozen years.
Yes. You really saw accounting from a couple different angles in terms of corporate, as well as it sounds like more staff accountant, handling one company's finances.
Exactly. Yeah. So I went from public accounting at Ernst & Young to internal audit at Merritt's, and then over to companies called Essence Group Holdings, kind of worked my way up to accounting director there. So yeah, it was pretty wide variety of experience and background. And so, like I said, it's a great background to have when you are looking at, moving to financial planning, because you've seen how businesses work and how taxes work and all sorts of different stuff that you can now apply to smaller companies, but companies that otherwise wouldn't get that help.
So you said that you made the decision, moved in financial planning, sort of fell in love with it. What was sort of your entry point? You mentioned MassMutual. Was that first or was there another stop?
No, MassMutual was first. I was there for about 2.5 years. So I'd poked around in a number of different places. I really wanted to kind of build my own business and not necessarily be like an employee at a larger RIA or something like that. And just MassMutual locally here, even though it's obviously an insurance-focused company, I felt like they probably did the most planning out of any of the other companies that I looked at. So, and I knew a couple of the guys there. So that really helped just kind of get that foot in the door and understand what they were doing and how they were helping clients. Obviously, there's a lot of sales involved and whatnot, but there was also a significant amount of planning, more so than you would see at other places, just with that particular local office.
So what was the training like? Because I've never worked in a place like MassMutual. So how do they, take a guy who clearly you knew about, the tax side, but how do they take you from that to being able to do financial planning and sales of products?
Yeah, really, it's the same as everything else. I mean, you kind of get hired with a class of people, mostly guys. There's some women in there, but just a class full of guys, and they take you through the training on, what different types of investments are available and how does that work, and what is the insurance that's available, how do you sell that, and how do you point out the benefits and features and all that sort of stuff. So there's no specific training for, hey, you have an accounting background, we're going to do this differently for you. You're really in with everybody else, getting the same kind of training on the products and different sales and how to just talk to people and reach out to them. It's all the same stuff. I don't get any special training.
So then how long did it take before you sort of transitioned into working as an advisor then?
Oh, pretty quickly. I mean, they want you to work with other more experienced advisors there, obviously, just till you get your feet wet. But no, I mean, you jump right in. It's, there's nothing really holding you back. They give you some training and then say, go for it. Go
turn you loose.
Yeah. So, and like I said, other people are there to help you along the way, obviously. So, if there's something that's just over your head or you're just not really sure how to handle it, there's other people there that you can work with.
So were you able to leverage your tax background? Like, were you able to actually do taxes or tax projections, tax planning as part of your work there? Or were they, sort of hold you off on that? Because I know some big companies have different rules around that.
Yeah, no, I had to hold off on it. And that was part of the reason I wound up leaving, was that I was trying to do some tax planning. I could not prepare tax returns, but I was trying to do some tax planning and, had some discussions with the compliance people on that. I guess even though our engagement letters say that we do tax planning, I guess I was doing too much tax planning. So
I see. The compliance folks came calling.
Yeah. So, and I get where they're coming from on that. To them, it's just, a big risk if I were to do somebody's tax return that they felt that they might be able to come after Mass Mutual if something went wrong and they didn't need that risk. So I get it. I wasn't upset about it. I was just trying to figure out, what do I want my practice to look like long-term and how can I best help people?
So was that the line was basically you could give as much tax advice as you wanted, but no filing of tax returns? Or was there a limit to the amount of even tax advice that you could give?
Yeah, there was still even a limit to the amount of tax advice. I mean, you can talk about, maybe some Roth conversions or stuff like that, but you weren't really allowed to get into, if you're working for a business owner, for example, you couldn't really dive into their financials and talk about different ways they could write things off, or should they depreciate things now or take it all over time and all that sort of stuff that we can do now, but we just couldn't get that far, that deep into tax planning. It was pretty, not necessarily basic, but it was more surface level, like, okay, well, this is what a Roth conversion would be, and this is what the impact would be. You couldn't really dive too detailed into the tax planning while I was there.
Okay, fair enough.
So that was part of the frustration. And also, as you guys talk about, I had asked about potentially doing some accounting work or something like that as a side hustle. We weren't calling it at that point, but as you're building up a business in an insurance world like that, it would have been nice to have a side hustle of accounting just for cash flow as we're getting started while we started the business in Mass Mutual. So, and that wasn't allowed. And to be honest, if that were allowed, I might still be there just from a cash flow perspective. If I were being totally honest, I probably would have just stayed on there and kept going. But I think as I talked with you guys about the XY planning model, it just made all the sense in the world to have an accounting side hustle like I do now while I'm still building up the financial planning practice. And it's actually worked extremely well.
Okay, fair enough. Yeah, it's interesting why, just the reasons why folks ultimately leave. Sometimes it's a cultural thing that at the firm, just not doing the type of work that they want to be doing. It sounds like whether it be Mass Mutual in general or just sort of your office, it sounds like the culture was fairly planning centric, just, also big company problems in terms of trying to, narrow down on what you can and can't do. Do you feel like all of the Mass Mutual offices had that same planning centric culture, or was that really unique to where you were at?
No, all the offices do not. I know some do, some don't. I had some experiences with another office that clearly they did not do planning. I won't go into all that details, but no, the local office here seemed to do a lot more planning than other offices did. And there were some pockets throughout the country, but I think it was more localized as far as how much planning they did. So that really wasn't an issue in me staying or leaving there. It really was just, all right, how was I able to serve the clients? What side hustle was available or not? And then ultimately, I kind of got frustrated with just the business model in general. I think having the accounting background, we can understand business models and how things play in and what's the drivers of growth and all that sort of stuff. And I was, right before I decided to leave, I was sitting there and it was like in the fall. It was like October of 2015. And I was doing the planning for the next year. And, in that industry, it's kind of a numbers game. You figure out how many people you need to meet with and what that might turn into and investments and insurance sales and doing all this stuff. And I was just going through this and I thought, well, this is just dumb. Like, I just don't like the business model. And I started just scratching out, what if I could build a model of my own that I think would work? And I started, writing out, okay, well, I'd probably just maybe charge people monthly because people are used to paying stuff monthly. And I'd love to incorporate tax planning and be able to do their tax work. And we could even include investment management in that monthly fee. And so just writing out all this stuff about the business model and ideal and what I'd like it to be. And in my researching all that, stumbled across XY Planning Network. So it worked out well.
That's awesome. Yeah. So you really defined the ideal based on the client that you wanted to be serving. You identified the ideal fee structure and service model, and which is awesome. Like, I think so often advisors get caught in the well, what's the best way? And we always get driven back to, okay, who are the clients you want to serve, and the service model and the fee structure and all of that really depends on that question. And, if you're going to be working with a lot of small business owners, you do need a pretty in-depth tax knowledge to be able to properly serve them. So it makes perfect sense.
Absolutely.
So you said that was 2015 when you were having that discussion. So when did you ultimately decide to launch your own RIA?
Pretty shortly after that. It's kind of a funny story because I had I remember sitting down. I got out of the office and went out to a Pandera, and I was just, because it was a nice day outside, so I'm just sitting outside writing all this out, and came across the XY Planning Network, and so I just started diving into everything you guys were talking about. I started listening to all these podcasts, which there were about maybe 18 of them at that point.
Yeah, not very many back then.
So I just started diving into these, and I actually started following Kitsis on Twitter because I saw he was putting out a bunch of material. So I said, well, I just want to hear what his philosophy is and kind of see what he's thinking. And sure enough, this was maybe on a Tuesday. I can't remember what day of the week, but it was early in the week. And midday that Friday, he tweets out, hey, I'm going to be in St. Louis for the BAM conference tonight. Anybody want to hang out? So I replied essentially saying, hey, you don't know me, but I'd love to talk to you about the XY Planning Network and pick your brain. And he replied back that evening, said, hey, I'm at Union Station if you want to meet up. And we had a good conversation for a few hours. And so it was maybe a month after that I decided to start my own RIA and go from there.
Yeah, Michael definitely follows the never eat alone concept. I am so bad at it. When I go to a city and I'm there for a conference, I just hole up and hide out till the event itself. And he is much better at having those conversations. But from a marketing and sales perspective and getting out and meeting people, it makes him feel very accessible despite being extremely busy and strapped for time. It does give you the ability to go sit down with him and talk about various things. And, you never know where that conversation will lead and, could potentially be a career changing conversation, which is fantastic.
Yeah, it was a really good conversation with him.
Yeah, that's awesome. So that was late 2015.
Yeah, it was sort of end of October 2015. And I started up with XY and started the RIA in December. So it was pretty shortly after that. And I did that intentionally. I made the decision quickly knowing that, January, February, March, April, those are going to be easy times to pick up accounting work.
Sure.
So I knew that while the state of Missouri was approving the new RIA, I could pick up some work. So I said, well, if I'm going to do this, I need to do it now because I should have no problem getting income those couple of months of the year.
So did you start both an accounting firm and a financial planning firm at the same time, or were they all under one entity? What was the legal structure?
Yeah. So I have a business partner named Dennis Fry. He was a client of mine at Mass Mutual, and he was also bouncing ideas off me when he was looking to leave corporate accounting to start his own accounting firm. So he had this accounting firm going for maybe about a year or so. And so, like I said, I was leaving in December knowing that I could find accounting work somewhere. So I kind of reached out to him and said, hey, do you need any help with anything? And he said, well, actually, if you're looking to do that, let's do this together. Because he was looking to bring more of a planning focus into the accounting firm, and I was looking to bring more of a tax and accounting in with the financial planning. So it was just a really good match. So he had already had the accounting firm started for a little while before I decided to leave. So now we're partners together in both businesses. There's just two entities. There's an accounting firm called CPAs for hire, and then a financial planning firm called CWOs for hire.
So was there an intention or a reason for having the two separate entities? I know this is a question that comes up a lot with advisors that are thinking about doing taxes, is that they want, they're not sure, do I do my tax planning in or tax preparation in a different entity? Was there a reason that y'all went that direction, or it just felt like the right call at the time?
Really more just to keep regulations separate, if nothing else. My view, just knowing regulations in the financial planning industry, is that I didn't want to have all of that in an accounting firm as well. So as you know, we have to have all our emails archived, and all the marketing stuff has to be tracked and archived and all that stuff. So just not having that burden on an accounting firm was really the reason for keeping things separate. That way we don't have to have multiple regulators coming after one company.
Okay. Yeah, it's like anything that happens in the RIA, in the entity that is the RIA, is available to the regulator. So I hear this a lot with folks like, what about my tax preparation? What about my speaking or consulting? Or I have this side hustle. Can I run the money through the business? And the answer is yes, you can, but it also exposes everything to the regulators. And it doesn't mean, just because you don't want the regulators looking at it, doesn't mean you have something to hide.
Right.
It just means much simpler audit support, audits, that on that every 3-year cycle. So
absolutely. Yeah. So that's why we kept it separate. I think that'll, like you said, make it much easier to handle any audits that come up either in the accounting firm or the financial planning firm.
So you have the two separate entities. And then, so how are you now splitting your time? Because we're 3 years in to this structure. So how are you splitting your time between the two? Do you mostly just live on the financial planning side, or are you like going between the two?
No, I'm still probably half and half.
Okay.
So still probably half-time accounting. And that's just over time gradually getting less and less as the financial planning builds up. But right now it's probably 50-50. I would expect next year, maybe it's something closer to 35 or 40% accounting, and then the rest being financial planning, if we can continue to build the clients like we have been this past year.
Okay.
You guys put out the survey every year of, starting from scratch, going years 1, 2, 3, 4. We've pretty well followed that. So,
okay. So revenue and revenue wise, number of clients wise.
Yeah.
So how do you balance your time come tax season? Because I know, obviously, you're going to get just sucked into doing taxes. I mean, just because it's such a tight time window. Obviously, you can file extensions, but not everybody enjoys doing that. So how do you keep the financial planning business alive and well while, transitioning over and focusing on the tax practice during tax season?
Yeah, the short answer is you just kind of work a lot, honestly.
Yeah, it's just a lot of hours.
Yeah, and I think part of that is because even on the financial planning side, as we're bringing on new business owner clients, that's when prospects tend to be more focused. So you kind of have this dual, you're getting tax returns in, but that's when people actually are saying, oh, it's the end of the year. We need to figure this out. So it is just a lot more hours, honestly. But the other part of that is on the tax preparation. If you're working with business owners throughout the year and really doing in-depth tax planning and doing projections throughout the year, the tax return at the end of the year actually isn't that hard because you've already done a lot of it. You know what to expect. Having been in a world where you're working with people and all you're doing is a tax return annually, you find that a lot of the time spent on doing the tax return is when you have to go back and forth with questions, or you're missing this piece of information and you're constantly, picking up this tax return and putting it down and picking it up again and trying to finalize it. Whereas if you've been doing the planning with them all year, you know exactly what to expect. So you don't really have a whole lot of questions at the end of the year other than, maybe you're running the final calculation to figure out how much to put in a retirement plan. So,
right.
But even that, you've at least had some general idea from doing the projection throughout the year. So if you're putting in the work throughout the year, the tax return's not that much more time. It's a little bit more time, but it's not that strenuous if you've been doing everything else throughout the year to get it ready.
Okay, that makes sense. Yeah. So I guess, is there a way to avoid, the 80-hour work weeks during tax season, or is it just, it's just a reality of being an accountant and doing taxes is that, that time period is just always going to be busy?
I think it will always be busy, but we'll be able to mitigate that more in the future. The plan longer term, as we continue to scale both businesses, is to actually have a tax person within the accounting firm. So that way that person can be doing the tax preparation and the projections throughout the year. So that way when I'm doing the financial planning, even though it's going to be a little bit busier because I'm working back and forth with everybody involved, I won't personally be doing all the tax returns myself. So I think that'll be the big mitigating factor, is once we get enough scale to where we can hire somebody full time to be just doing the taxes and all the tax planning, that's when it'll smooth out the year and really take some burden off during those couple months.
So talk to me a little bit about the transition from accountant to financial planner, because I think sometimes we take it for granted that, you just move over and start doing financial planning, but they are very different services. So yes. How was that transition for you? And what takeaways did you learn that maybe some of our accountant listeners could benefit from?
Yeah, I think first it was actually more difficult than I thought it would be. I think like most people, I have a really good background in accounting and finance. And I just kind of had this mentality of like, well, I'll just go do financial planning and I know my stuff, so people will want to work with me. And you find out that doesn't just work like that. So you actually have to go out and do some marketing and find some people and have a plan around that. So I think just from an accounting background and even from a tax background, you're used to people having to do something. So like in accounting, people have to do their financial statements. They have to do a tax return every year. Like,
right.
There is no choice in that unless you want the government coming after you or the bank coming after you. Like, these things have to be done, where nobody has to do financial planning. I think that's a big shift in mentality, is that, yes, people should be planning, but there's no deadline for that for them unless they're going to retire. I mean, that's usually the deadline, is like, oh, I'm going to retire, or maybe sometimes people seek help if they're sending a kid to college or something. So that's been the biggest transition, is just understanding that, if there is no pressing deadline or something that has to be done, you're really just looking for people who need your help and are willing to take the time to do it.
So how do you have that conversation with folks that are used to deadlines, they're used to having to do it, and suddenly you're sort of selling them on a service that they can do at any time? I mean, have you found any techniques or ways of communicating that have, sort of encouraged them to get in and get started?
A lot of times it's really just understanding what their pain point is and what they might be missing. And that really helps to have the focus on business owners there, and also the tax background, because there's a lot that could be missed there. Just reviewing their tax return, or looking at what they're doing investment-wise, or looking at cash flow. I mean, we can pick up an income statement for a business owner and just go, oh, your rent is too high. Like, we actually had that conversation one time where like the business owner was struggling because they're saying, well, I feel like, we're getting a lot of sales, but for whatever reason, there's no money at the end of the month, and I just don't understand it. And the rent was just outrageous. And I said very flatly, like, you won't be in business in 3 years if you still have this rent. And so they went back to the landlord and showed them everything, explained it to them, and they got their rent knocked down because their landlord didn't feel like trying to find somebody else in the space. So it's usually stuff like that, where it's once you get into talking with them, having them understand that, to your point, the value is not that there's this thing that has to be done. It's where they really need help is they're extremely busy. They don't have time to research all this stuff, but we can just pick it up and look at it and say, okay, well, this is what we need to do with this, and let's go research this other thing. and really find opportunities where they would have otherwise missed along the way. And that really gets them understanding the value of ongoing planning and having somebody there to look at this stuff. That way they don't have to try to figure it all out.
Yeah, I'd be interested to know if like the psychology of a business owner and just their experience in working with accountants and having to do having to think about the business and the financials, if that makes them more receptive to financial planning, just because they've seen essentially financial planning for the business and they have to do it, just whether or not they're more receptive to planning than your average consumer.
Yeah, that's been my experience. When I first got started, we wanted to focus on business owners, but then I also had the thought of focusing on like corporate executives, because when I was in the corporate world, I handled a lot of the benefit plans and stock option plans and all that stuff. But I haven't really had any luck getting clients who are corporate executives. I think it's just for that reason of, they're not necessarily used to the idea of, oh, I'm going to pay this person a monthly fee to help me. Whereas a business owner, they're just used to that. There's, whether it's marketing or, administration of some sort, they're used to just paying for a service to help them and free up their time. That's been my view of that. And what I've seen is that I feel like business owners are used to, okay, I'm going to pay this person. They're going to save me a lot of stress and time, versus somebody that doesn't own a business. Perhaps that monthly fee is just kind of an extra expense and they're not quite sure what they're going to get out of it. And maybe it's just me and how I'm talking with them about it, but that's been my feeling from business owner versus non-business owner.
Yeah, no, that makes absolute sense. So when did you get the CFP designation then? Did you go through that education when you were at MassMutual or after you started your firm?
No, it was in the crazy spring, right when I was getting everything formed. So I kind of did.
Oh man, talk about doing everything at once.
Yeah, I wouldn't. Don't recommend that. We had a lot going on. So we had just had our third child, and my wife, her family owns some Dairy Queens in the area. And so before I had even looked at switching to a new RIA, we had agreed to start managing that Dairy Queen, mostly my wife. So she started that as well in January. And so I left the firm. I started doing a tax work for about 55 to 60 hours a week. And I did the CFP capstone, took the CFP exam while my wife was working with a 3-month-old. So don't recommend that to anybody, but that's just kind of how it worked out. And we got the CFP done.
Yeah, it's funny how many stories we have on this podcast of people that like can't just do one thing at a time. And I'm so guilty of this as well. It's like, let's launch a new business right when we're having a baby. It sounds like a great idea. But that's the reality for so many people that come on the show that, things just tend to, it's that whole things come in threes. So so that's awesome. So your wife was transitioning into management while in a new job while having a baby, and you're, taking on new responsibilities and getting CFP. That's just an insane amount of stuff.
Yeah, it was a crazy few months, but we made it. So yeah, the CFP, I just knocked it out right away after I left MassMutual to start the RIA. I just wanted to have that designation because it, as you've mentioned on these podcasts, it really, it takes a lot of questions out. I feel like it's, when you have a CPA and a CFP, I don't get many questions on qualifications. It's more, okay, well, what do you know specifically that can help us? Nobody's going, well, what's your background? What's your education? It's like, well, yeah, I'm a CPA and a CFP. Like, what do you want to know? Like,
it's going to be hard to argue with that.
Yeah. So at that point, it's more, like I said, just questions that they have that are specific to them and how I can help them. And that's really nice to have just all the experience questions not even show up. It's usually just, okay, how long have you been doing it? And then, like I said, what specifically for us can you do?
So talk to me about that first year and just how that went, because obviously a lot of your focus getting sucked up into the tax practice. So I guess starting out, were you able to bring any clients over with you from MassMutual?
Some clients, not a ton, but yeah, there was a handful of clients that I brought over. And honestly, that first year, a lot of it was just bringing over the new clients. I mean, because really the RIA didn't get approved until probably March or April, and I was still doing tax work. So once we got out of that in May, it was really rolling over the existing clients and just getting everything started, just the systems and administration to get it going. And I was able to bring on some new clients, but no, first year was kind of just transition, get it going, bring over who I could, and just try to hang on and survive, really.
Sure. So how was it getting the firm started, given all the other things that were happening? Like, did you feel like, did it take a year or two before you felt like you could really come up for air and focus on, starting to grow the business?
Yeah, it was really the second year when I was really able to grow it. And like I said, the first year, you're just trying to get going and get things in order. And you don't have a ton of revenue coming in under a monthly model anyway. But once you're in your second year and you got some recurring revenue coming in and you can spend some time doing some marketing and getting yourself out there, that's really when it'll start to grow. And like I said, my numbers have pretty well followed what you guys have done in the survey. So as you know, the first 2 years are kind of rough. It's the second year really starting to get going. And then this third year of 2018 has finally been like, all right, this is really going. The clients are happy. It's pretty easy to get business owners in the door once they come and talk to us. And so you just kind of get on a roll after the years. But yeah, that first year is kind of rough, just getting started. Second year, getting into it, getting ramped up. And then you start getting into the third, and hopefully the fourth year keeps going that well too.
Go in the right direction.
Yeah.
Yeah, I've started thinking of it. That first year is just pure adrenaline, right? And just excitement. Yeah. And that's when you're willing to do an 80-hour work week to get through the CFP and get revenue going and all that. And then year two is sort of that like, oh crap phase of like, what did I do? Because it's when I'll just say the adrenaline and the excitement of starting a business starts to wane. You're trying to, you're starting to have conversations like, well, I could make 4 times more money if I went and got a job and work a whole lot fewer hours. And then, I'll say I see that as sort of that growth phase between like 10 and 25, maybe 30 clients. And then you really come out of that. And that's when that's when people sort of pick their head up and they're like, all right, this was the right call. Like, I am glad I did this. That has sort of been the progression that I've seen from advisors.
I think that's spot on. Yeah. Like you said, I think in the first year, you're just gung ho. In the second year, you do that voice in your head that says, this can all go away. You just have to go get a job.
Yeah. It's so easy. Just go get a job.
Yeah. Why are you doing this?
We could
think long term and understand what you're trying to build and why you're doing it.
Yeah, we could draw sort of the emotional roller coaster of the first few years. And now it's not a smooth roller coaster. It's a lot of ups and downs, even intraday ups and downs. But the reality is you do come through it. You just have to have enough time. And that's why we say, to start the firm with enough financials that are either a side hustle like you have, or a significant other that works, or something, enough savings so that you can actually so you're in business long enough to get through that phase. Because if you're barely able to make rent and all that, like, it's going to put a lot of undue pressure on yourself that you may not be able to get through, honestly.
Mm-hmm. Absolutely. And you talk all the time about supportive spouse, and my wife is awesome. So she was very patient through all of that.
Yeah. And again, especially at the same time of starting her own new career and with a little one, like that, it would be very easy for y'all to not be on the same page when it comes to starting a business.
Yep. Absolutely.
So looking at year sort of 1 and then I guess 2 and 3, sort of what was your client base and revenue sort of over those 3 years? How has that progressed for you?
Sure. So, client base, like I said, first year was really just bringing over whoever I could from Mass Mutual. Kind of later in the year, that was, I don't have the exact number, but maybe 5,000 or 6,000 of revenue. Really small first year. The next year, as you said, you start to get into that 25 to 30 client range with revenue in around 30,000. And now here in the third year, we'll probably finish up. I know the run rate on the revenue for next year will be about 65,000. And like I said, I think there's 46 clients as of today. So it starts to build pretty quickly once it gets ramped up. And I was even running projections for next year where I could, my with business owners is, $975 up front and then $375 a month ongoing. So even if it's just one per month, obviously it never happens that perfectly, but even if it's just one per month, that'll be 41,000 of revenue for next year on top of the ongoing revenue that we already have. So it starts building pretty quickly once you get it going. It's just, like you said, those first couple of years, it's a grind to get it started, but it's worth it in the end once it starts building.
So, yeah, I mean, it really is starting to pick up for you. I want to circle back and talk about fee structure and service model, just because I think that's going to be really unique. Where are you having the best luck in terms of finding new clients? Are they just all coming over from the tax practice? Is that the entry point? Or have you found some other mechanisms that, from a marketing standpoint, that work well in terms of bringing in new clients?
Yeah. So not necessarily coming over from the accounting firm. There's some that come over, but a lot of them that come to us, I do a lot of videos and such on LinkedIn. So I have a lot of business owner connections. And so I'm always just putting out helpful content. So that way they can go on and be like, oh, this guy knows what he's talking about. And if they have questions, they can ask, and that'll help bring in some clients as well. And we've been using Brewer Consulting to help with that. I know some other XY members use them as well.
Sure.
So that's been helpful. And then others just find us online most of the times because they're specifically looking for someone who is a CPA who can also do financial planning. That tends to be where we get a lot of business owner clients, is actually not from people who are frustrated with their financial planner. It's from people who are frustrated with their accountant. So we get a lot of, I have an accountant, but all they do is my tax return. Or I have an accountant, but they don't really give me advice. Or I have an accountant, but they don't really ever get back with me when I have a question. So it's actually kind of interesting. I thought that, nobody says, oh, I have, an investment person here that I'm not happy with. It's usually actually an accountant that they're just trying to get more out of. And they really want more than just the transactional doing the return or doing their books. They actually want ongoing advice. And so they find us online and they come seeking help in all areas of financial planning, but also have the ability to do their taxes.
Yeah, it's really interesting because, the accountant world has a bad reputation, and I think they've earned it. I know a lot of accountants are trying to move away from it, but that, they're sort of pigeonholed into looking into the rearview mirror, right? They just like stare at the rearview mirror, and clients, especially business owners, recognize the need for projections and to really be looking forward and asking that question of, how can I do better next year? Or what can I be planning on? How much cash should I be setting aside for taxes and all of those things? And so it is interesting to see the accounting profession sort of moving that direction, but obviously a lot of older school folks that may not want to be changing their service model anytime soon.
Absolutely. Yeah, like I said, that's mainly who we get in, is people frustrated with their accountant. They're not getting something from them that they need. And so they come to us seeking that help. And that's worked out quite well for us.
So talk to me about your service model. So, new business owner comes in. First off, I missed the upfront fee. What is your upfront fee for planning?
$975.
Okay, so $975 upfront, and then $375 a month.
Yes.
How did you land? I'm mainly curious about the $975 upfront. It just sounds like disproportionately small to the monthly fee. So how did you come up with that number?
Yeah, I've heard that a lot.
Fair enough.
There's no great science to it. I think we just want to have, obviously, an upfront fee. That way it kind of offsets the time for initial planning and, gets them committed, as you talked about a number of times. If you don't charge an upfront fee, people just kind of go, oh, well, we'll get to it when we get to it. But at the same time, we didn't want it to be too much of a barrier of entry for people to actually get in and start doing the monthly planning. So I don't know if that's the right amount or not. I've heard that I should be raising that, but we'll see. Maybe I'll raise it at some point. I just haven't gotten there yet. I
see a lot of advisors charging in that range. Generally, I see that, paired with like a $100 to $200 a month planning fee, not necessarily $375. It'd actually be interesting to see what the average, if most people's upfront fee is something like 2 to 3 times more than their monthly, or, 8 to 10 times, which, would be if you were charging $100 a month. But more importantly, you've been able, and I commend you for this, you've been able to get that monthly fee up to what is much more likely an appropriate level. So did you start the firm at $375 a month, or how has that changed over time?
You know, that's not how it works.
I was hoping, but you never know.
Yeah, I think for business owners, I started at $250 a month. And then actually through working with Brewer Consulting, they were jabbing me repeatedly. They're like, you got to get that up. Like you got to raise that for what you're doing. $250 is not enough. And it was true because we're doing a lot of planning for them, plus their taxes and everything included in that. So eventually I raised it to $300 right away after talking with them, and then eventually got it up to $375. Honestly, because when I was at $300, I wasn't really getting any no's. And so I kind of had the thought of, well, if somebody's willing to pay $300, they're probably willing to pay $375. And sure enough, like that amount is not prohibitive for a business owner who's, running a successful business. They just want the value. And when I can show them, okay, well, this is what we can try to save you in taxes. This is what we can save you in your time for your planning and all this stuff. And we'll go through everything we're doing for them. We found that 375 is a good level to be at for now. I don't know if it should be higher or lower, but right now it's working, and it's a whole lot better than the 250 I was doing initially.
Yeah, no kidding. So, that works out to $4,500 a year.
Yep.
I would say, again, one of the benefits of working with busy professionals or busy business owners is that you really can fall back on the time savings, which
yes.
Some of us work with a niche client base that doesn't necessarily benefit from the time savings of outsourcing, or just values their time a little differently if they're a salaried employee. Nothing wrong with that. It's just the sales pitch to your client is going to be a little different, and yours really can be heavy on the time savings, plus all the benefits, obviously, as a business owner that you can provide them. But it's awesome that you have that, to be able to showcase. And I doubt it's very hard to show $4,500 a year of time savings.
No, not at all. Not to a business owner. They're usually running around like crazy. So just being able to even just have one person to call. That's been another big benefit of having both the accounting in there, is that, if they're used to having a financial advisor and an accountant, they got to get those people to coordinate and don't always talk to each other or know what's going on. So just the time savings for them of saying, all right, I can contact Dave and I don't have to go to multiple people and try to figure out who can answer the questions. Just done. Like, here, just send me whatever your question is, send me what you got, and we'll take care of it.
So what is your service model in terms of just how you're actually working with these clients? So new business owner shows up, they're paying the fee, but what are they getting for that? How have you structured the service offering?
Yep. So we're doing a couple of things right off the bat. One is making sure that their business is structured properly. We find that a lot, that just they don't have the right structure. They're just not saving on taxes or something. But we also want to get into their cash flow and their financials and understand, are they having trouble with cash flow, or are they doing really well and they're just having a whole lot of taxes to pay? Have they saved anything outside of the business? We're diving into all that and just understanding where they're at. And then we take I guess you've called it before, a modular approach, where we're not doing just everything all at once. Honestly, because I've found, especially business owners, but really everybody in general that I've worked with, is if we try to do everything all at once, they just can't absorb it. And it's not because they're dumb. It's just because it's a lot of stuff. If you throw in insurance, investments, retirement, estate planning, if you're just dumping all that at once, I just haven't found anybody who can really absorb all that and act on it and understand it. So we try to take it in pieces to where, like I said, let's understand business structure, cash flow first, and also just make sure we're focusing on whatever it is that they came into us for in the first place. Because usually people have something specific in mind right off the bat that they need to get taken care of. And so once we've gotten past that initial cash flow structure, get past their concerns, then we can dive into, all right, how are they investing? What are they saving in? What insurance coverages do they have, both for their personal and their business? And then we're constantly engaged with them. So it's not we'll see you twice a year. Not that there's anything wrong with that, but I tell clients that just, if you have a question, call me, email me. Don't wait or think that, I'll be bothering him. Just, if you have a question, ask, because we'd rather have a dialogue on it and figure it out up front versus trying to go back and adjust something later. So it's, I found that even though a lot of people might worry about not setting that expectation of, okay, we're only going to meet at these certain points of time, what I'll usually tell prospects is, I'm not worried about you abusing that because you'll probably be tired of hearing from me, honestly, because I'll be the one going, hey, we still have to do this. We still have to do this. We still have to do this. And so
that's awesome.
Especially for business owners, as you said, they're extremely busy. And so it's not usually them bothering me. It's usually me bothering them saying, hey, we got this coming up, or we still haven't done this. We need to get on it. So it really is an ongoing relationship. And with certain points of the year, we'll do tax planning, whether it's once or twice a year, just depends on their business. And that's one particular lesson I learned this year is I need to stagger that a little bit better, because I told a whole bunch of clients like, oh, after we get your September financials, we'll do a tax plan. And so October, I was slammed doing tax plans. Yeah, we'll stagger this out a little bit next year.
Right after doing all the returns.
So yeah,
So does the accounting practice actually do the tax preparation then for your financial planning clients? Like how are the structure of the entities working inside of this service model?
Yeah. So technically the accounting firm is the one filing the tax return and has the tax software. So even when I'm doing the tax planning, tax return preparation, it's me doing it, but it's on behalf of the accounting firm. And so we haven't formalized the intercompany there yet. But like I said, long term, the idea is that we have a person in the accounting firm just doing tax, and then the financial planning firm will actually pay the accounting firm to do it. So,
okay, that makes sense. Yeah, we're set up similarly here. FA Bean Counters, our bookkeeping and tax preparation company. I mean, they do the books for Advice Pay and XY Planning Network and XY Investment Solutions. So we just pay them, which is really funny to have like FA Bean Counters pays XY Planning Network for office space and pays rent, and then we pay them back. I mean, there's money flowing between the companies, and it's all on paper just to keep it clean. But it does help us to see, like, are we running FABC profitably? Because you may look at it and go, well, oh no, like we're running it even. There's no profits, but it's because we're, using $30,000 worth of services and not paying ourselves. So once you clean it and run it like a real business as a separate business, that's when you can spot potentially issues or positives that you may not have seen.
Right. Absolutely. So yeah, we've separated that out. Just like you said, makes it easier and cleaner. Otherwise it'd all get blended in. And also just, again, as we talked about, for the regulatory purpose, we want the tax return to actually be filed out of the accounting firm. The client doesn't really know a difference other than they'll see the accounting firm's name on the tax return, but they're still paying for everything through their financial planning service.
Okay. So in terms of the fees themselves, how do you business owners have a unique ability for you to be able to bill the business for some of the financial planning fees. So how do you make decisions around how you actually allocate fees to the various entities?
Well, at this point, it really is just all going through the financial planning entity. And that's what will work out down the line is, how much do we pay the accounting firm specifically when we have a tax person and they're doing the tax returns. We haven't structured that exact dollar amount at this point. But that's something we'll have to do as time goes on, is figure out, okay, out of this $375 a month, how much of it's really going to wind up going to the accounting firm for their work.
Yep. So, but their business is paying the full fee then, or I guess, is the business paying some and then the client individually is paying some of the fee, or is it all coming out of one place?
No, it's all coming. So the client's just paying the financial planning company $375 a month, and then the financial planning company it's basically like a contractor. They'll say, okay, we'll pay you however much per return or per your time spent. So it's really just like the accounting firm is a vendor for the financial planning company in this instance, where financial planning is getting all the revenue, but then a portion of that will go to the accounting firm as a vendor.
Okay, makes sense. I'm doing a bad job of asking this question. Let me take a step back. Sorry. So, no, you're good. So since, now financial planning fees are not deductible as a miscellaneous, if the business pays you, they can basically write off the entire fee as a business expense.
Correct.
But that may not be appropriate. So what, from the client standpoint, when they're paying for financial planning, is the business entity paying you the full fee or partial fee or none of it?
The business entity is generally paying the whole fee.
Okay.
And there's some question about can they write off 100% of it or not, obviously. But most of what we're doing planning-wise involves the business anyway. I mean, they're
be hard to separate it out.
Yeah, especially for a business owner, they kind of view their whole world together. Like their business sort of is their life, and the only thing we're really doing that would be considered separate is maybe if they have an IRA account that's separate, or if their individual return is separate. But even on the individual, there's so much of their business woven in there as far as the results getting onto that return, and can they do health insurance deductions and all that sort of stuff. So the majority of the planning is still around the business anyway. So yeah, they can pay for that service and write it off.
Okay, that's awesome. So you mentioned earlier about investment management. So is investment management included in the fee that you're charging, or is that a separate fee? How does that service work with your fee structure?
It's included. We have some clients who are just AUM, maybe because they said, "Oh, here's a 401k rollover or something for $100,000. Can you help me with it?" And we say, "Okay, sure." But for business owners, it's all included. And honestly, there's not typically a lot of investments to manage for a business owner.
Okay. Just all their money's wrapped up in the business. Right.
So we're usually the ones trying to get them to save outside the business. So they might have an account that's, $50,000 or $100,000 or however much. It's not going to be a massive investment account until they really have gotten to the point of growing the business. And at that point, we'll have a discussion with them on, should this be AUM? Should it be a monthly fee or whatnot? But with where most of the business owners that we work with are at, they usually have some small investment account, usually, a SEP or a simple IRA, some sort of retirement account where it's going to be pretty easy to manage. So there's not a ton that we have to do on it. So we just include it in that monthly fee.
Okay. So if you have a business owner sells their business for $5 million, do you think you'll roll out some sort of separate investment management fee and service to be able to handle the assets?
Right. We'll either have a larger monthly fee or just go straight AUM at that point.
Okay. That makes sense.
Because really, we're not at that point consulting on their business too much. It's more that, like you said, they've gotten the big chunk of money and now they just need somebody to take care of it and continue to plan out their personal taxes over a long term.
Have you started or had any conversations around doing planning or providing financial wellness or anything to the employees of some of your business owner clients? Because I feel like, they probably, have employees that potentially could leverage, some services, but don't necessarily need $375 a month worth of financial planning. So has that been brought up, or are just most of your clients just don't seem interested in that?
Yeah, that's a really good question. It hasn't been brought up yet. I think I brought it up maybe a couple of times just in passing, and it just hadn't gotten a whole lot of interest from business owners yet. We do have some businesses where we operate like a 401k or a simple IRA for people. And as we're setting up accounts or just going year to year with people, sometimes they'll have questions on things. And so I'm just there to answer them. I don't really charge anything separate. There's not a whole lot of that going on. But no formal program yet. I think the smaller businesses might struggle with that a little bit more so than like the larger corporations. They'll usually have some sort of employee financial wellness program. I think the smaller businesses struggle to really see the reason to allocate money for that, I guess. They're more focused on, okay, we'll try to provide the benefits. We'll give you a 401k plan. We'll try to find maybe some health insurance for you. But they haven't really gone to that next step of saying, well, here's a financial wellness person that we're going to pay for you. So haven't gotten there yet, but that's a great question.
Yeah, there's just more and more conversation happening around financial wellness and financial well-being, and just recognizing the challenges that come with low financial well-being amongst employees. So I think it's a conversation will be happening more and more. But it's nice because you have an in, right? The business owner. So if anyone's going to provide that service, it's going to be you. It will be interesting to see when, what it takes to help explain to business owners and make the financial case that, yes, paying $50 a month or $100 a month or whatever it takes to be able to give their team members access to financial advisor and the benefits of that long term. So
yeah, I will say along those lines, probably one of the most enjoyable things, even though it doesn't really make money for the business per se, is it's really enjoyable to see some of these employees who don't make a ton of money. If we set up a retirement plan for them, all of a sudden they've got money going into a retirement plan and they get a statement a year later or 2 years later. And they say, oh my gosh, I've never had this much money before.
Right.
Because if you hadn't given them that automated place to save and given them the employer matching it, they'll all say, I never would have saved this and I've never had this much money. And that's such a wonderful feeling to be able to hear that and provide that to people. And the business owners love it too, because, they now see like, oh, this really is meaningful to this person. Even if it's just a few $1,000s, like that's huge. And that's a good start for them. And that'll continue to build as they're in the plan. And so it's one of the more gratifying things is when you get to see the actual employees who are in these retirement plans, and they'll literally say, I have never saved this much. And I know that if this plan weren't there, I never would have saved it on my own. So it's kind of in that same vein of financial wellness. It's just the automated investing coming out of their paycheck. And it's so funny because I'll go to these companies. So I usually go like once a year, at least if they have a 401k plan, just to enroll new people, answer questions. And I always remember that first year, it's like pulling teeth to say, oh, well, really, it's only a couple percent. You won't notice it out of your paycheck. It'll be good for you to build. But after like the second, third, fourth year, like the other employees are the ones selling it to the people who aren't participating. Like, you don't understand. You don't even notice. It just comes out of your paycheck. It's great. And so it's just fun to be part of that and see, those folks who are great people but wouldn't otherwise have saved the money, just giving them that vehicle to build that wealth it's awesome.
What platform do you use for simple IRAs and 401ks and that sort of thing?
That's been a challenge to get that all in one place. Okay. For simple IRAs, what I'm doing now is it's just on TD Ameritrade, and I've started to use XYPN since they've come on board and they started to use simple IRAs. For 401ks, I got it in a couple of different spots. I got employee fiduciary, got Vestwell, just trying to figure out the best solution there. So no, I mean, that's one thing on my list to try to simplify is getting a good process and kind of getting it all in one place and understanding what the best route to go is there. Because there's a lot of different offerings, a lot of different options, and just haven't found a good home for everything yet.
Okay. No, that's good to know, because I know that's something I actually got an email this morning about solo 401ks and where to put them. Yep. Because the systems that we use don't, we use Guideline here at the office, but that's not an advisor platform. You can't certainly can't deduct fees. You can't, advisor can't go in and manage it or anything like that. I know they're headed that direction, but so what are your big goals, I guess, for the next 12 to 18 months? What are you looking at from a business perspective moving forward?
Really is to continue the growth. Like I said, this has been a good year for growth. It'd be nice to be able to get like 2 clients a month at that level, because that would build very quickly. But even at just 1 client a month, it starts to accumulate over time.
Sure.
So really that business goal over the next year or two is to get up to a scale to where I'm able to focus a lot more time on the financial planning. And then, as I mentioned, if we get this, the accounting firm is actually a larger entity revenue-wise at this point, but we're still trying to get both businesses up to the scale to where we can say, all right, bring in a tax person just to focus on that. So we're really just trying to, over the next couple of years, get enough scale to where it takes a load off of our plate so we don't have to feel like we're doing everything. As I'm sure you've experienced from growing the XYPN network from year 1 till now. It's a totally different world when you were the one doing multiple things and wearing a lot of hats versus being able to have experts in certain areas that honestly can do better than I can at some areas. So
Yeah, and that's the goal, right? Hire people that are significantly better at your job than you are in different areas and hand it off.
Right. Absolutely.
That's the goal. So, if I guess just to wrap up with our standard final question, you're 3 years into the business, you've been running 2 businesses, you've been growing both, have done a lot in these first couple of years. So looking back over the last, 36 months in terms of what you've learned, if you think about, being able to go back and give your younger self one piece of advice, one thing you wish you had known then that you've learned over time, what do you think that piece of advice would be?
I would say not to, kind of like you were talking about in the second year where you start worrying about things and you have voices in your head telling you could go do something else or whatever. I would just say, kind of try to put that fear aside. And there's a healthy fear that really makes you focus on the business and do what you should be doing. But then there's just an unnecessary fear and worry that, oh, am I doing the right thing? Am I not doing the right thing? Just understand that it takes time, and not to let fear stop you from getting in the industry if it's something that you should be doing and you want to be doing. And then as you're going through getting it built, if you get those thoughts in your head, try to get them out of your head quickly, because you got stuff to do and you got a business to build. So don't let fear and worry stop you from doing what you need to do to make your business happen.
Yeah, I absolutely love that advice. Awesome, man. Well, thank you so much for taking the time to come on the show and share your career path and what you've been up to. It's super exciting, and look forward to continue seeing your continued success. So thanks so much.
All right. Thank you. Thanks for having me.
XYPN Radio listeners, you're invited to attend the event of the year, and even better, you're invited to get your pass at the best possible price. The can't-miss annual XYPN Live Conference returns to St. Louis in September 2019 with valuable content for new firm launchers and established firm owners alike. Take a couple of days to work on your business instead of in your business, and connect with like-minded financial advisors leading the real financial planning movement. Go to xyplanningnetwork.com/XYPN Live Radio to get a deal on your pass through the end of the month. But hurry, the price goes up at the first of the year. Visit xyplanningnetwork.com/XYPN Live Radio to grab your pass today. Be sure to join our VIP community at xyplanningnetwork.com/VIP to hang out with other XYPN Radio listeners, ask questions for future mailbag episodes with myself and Kitsis, and to finally find a community of like-minded financial advisors. Thanks so much for joining me today. We'll see you next time.
You're not alone, and you're not crazy. It's scary starting, building, and growing your own financial planning firm. And that's why we put together a free private community just for you, the Cutting Edge Financial Planner. Go to xyplanningnetwork.com/VIP or text XYPN Radio to 33344 and join a network of thousands ready to change the lives of Gen X and Gen Y clients.